I want to respect your time, Dr. El-Erian. I do have one final closing question. Most of our listeners are individual investors or advisors who diversify their assets widely across asset classes and styles, often using index funds and ETFs. I think that you've already sounded a warning about certain types of index funds in certain segments of the market, but more broadly, as they think about the structure of their portfolio and how they allocate capital, any other parting words of advice or perspectives that you can share about how they might want to think about the way they're positioned, knowing that sort of like the traditional sort of stereotypical portfolio might be 60% US, 40% US bonds, or perhaps they work some international in there as well?
So I would say, a lot of the conventional wisdom in investment remains valid. And one of the things that individual investors has to be careful of is the extremes. Behavioral scientists and behavioral finance people will tell you that when you take investors out of their comfort zone, and we are being taken out of our comfort zone in so many ways, not just in terms of what we are seeing happen to our investments, but also in terms of what we're seeing happen to ourselves. The whole range of normal daily life has come to a halt. So we are way out of our comfort zone. There tends to be two reactions that are particularly pronounced in the financial markets, either paralysis or an overreaction. And it is critical for the individual investors to understand that it is natural to feel unsettled. It is natural to feel uncertain. It's the reality we're living in. And to fight that tendency to either completely be paralyzed or overreact. So you need a few principles to guide you. And you need to ask yourself two questions, and they're critical questions. One is, I know that in this uncertain world that no one can predict, the likelihood of mistakes has gone up. No one wants to make a mistake, but the likelihood of making a mistake has gone up. Which mistake can I least afford to make? Because that goes back to my earlier point that most mistakes are recoverable. We discovered that in 2008. So the question is, which mistake can I not afford to make? That's the question that every investor should be asking themselves when they look at their asset allocation. And it speaks to their tolerance for risk, their tolerance for volatility, and also what is the time span that they think of in terms of their investments. So that's the first set of questions that each individual investor has to ask. Not what will go well for me, but which mistakes can I not afford to make? Once you've answered that question, then guide your decision by what I call regret minimization. You will face trade-offs. You will face trade-offs of, do I leave money on the table or do I protect my portfolio? Do I sell when prices have gone down so much or do I wait till I get a bounce? And these questions can only be answered at the individual level, but ask yourself the regret minimization. If I end up making a mistake, which again, I don't want to make, but if I end up making a mistake, which mistake will I regret less? I have found, having managed other people's money, which is a massive responsibility through very, very turbulent markets and emerging markets, that these two simple guidelines, if you like, can help navigate and simplify what is an enormous complexity. The average person out there, to give you a parting image, the average person out there is not just trying to drink from one fire hose, they are trying to drink from 3 fire hoses. One fire hose is all the information that's bombarding them every day about the market, their portfolios, and people seeing things they've never seen. The fastest correction in history. The biggest outflows from mutual funds, investment grade. These are things we've never seen. It's literally a fire hose of information about markets, your portfolio. Then there's a second fire hose, which is what's happening to our daily lives. Can we go out? Can we interact? Can I find supplies? And we're having to internalize this second fire hose of information about fundamentals, what's going on in the economy. And the third fire hose, if 2 weren't enough, is policies. Literally every hour, we have yet another emergency policy intervention. It is hard enough to drink out of one fire hose. It is virtually impossible to drink out of 3 fire hoses. So simplifying things to make them actionable can help a lot. And then the time will come to go back to a paradigm when we can actually take in all this information that's around us.
Well, this has been wonderful. Dr. El-Erian, we know how extremely busy you are these days. Thanks so much for taking the time to share